Hey everyone, welcome back. I'm your host Ian, and today we're tackling one of the craziest chapters in recent Canadian and really global history. The pandemic madness, along with the 2020 to 2021 housing boom and the investor frenzy that came with it. Heading into 2020, Canadian real estate had been on a long upward trajectory since the early 2000s, with prices roughly doubling in many areas over the prior decade. Nationally, the average home price sat around $500,000 in late 2019, according to stats from the Canadian Real Estate Association. But there were already cracks showing. In places like Toronto and Vancouver, prices had cooled a bit in 2018 and 2019 after government measures like foreign buyer taxes and stress tests aimed to temper speculation. Household debt was sky high. Canadians owed about $1.75 for every dollar of disposable income, one of the highest ratios in the world. Sentiment wise, before COVID hit, there was a mix of optimism and caution. Many viewed real estate as a reliable investment, especially in urban centers where demand from immigration and job growth kept things moving. But bubble fears were rampant. In economic discussions, warnings about overvaluations were very common. For example, in 2019, economists noted that house prices were 20 to 30% above fundamentals in some markets. Overall, pre-pandemic, real estate was seen as a strong but a little bit vulnerable asset, not something that would appreciate forever without some risk. There were concerns about a correction if interest rates rose or the economy slowed down in any way. Then COVID-19 slammed into Canada in March 2020. Everything changed overnight. Lockdowns hit, businesses shuttered, and unemployment spiked to 13% by April. Early on, the real estate market completely froze. Sales plummeted 57% nationally in April 2020 compared to the year before, according to CREA data. Listings dried up and sellers pulled back, fearing they couldn't show homes safely. Prices also dipped slightly in some areas. Toronto saw a 1 to 2% drop in benchmark prices early on in those days. People were panicking about a slowdown. Analysts and media predicted a crash. Articles from March 2020 warned of a stalemate between the buyers and the sellers, with activity completely grinding to a halt. Reports highlighted signs of cooling. Discussions also echoed fears of a severe recession, citing Canada's trade dependence, debt levels, and real estate vulnerabilities. There were predictions of 10 to 20% drops, similar to 2008. No one was talking about appreciation. It was all about survival and the fear of a bust. But then the madness kicked in. Instead of crashing, the market exploded. By summer 2020, sales rebounded dramatically. Nationally, home sales hit record highs, up 46% year over year by October 2020. Prices followed with this demand. The national average home price jumped from that $500,000 in early 2020 to over $630,000 by the end of 2021. That's a 26.6% increase over those 2 years. In hotspots like Toronto, prices rocketed 28%, while suburban areas saw even bigger gains, up to 50% in places like Quebec City outskirts. Suburbs boomed as people fled cities for space. It was a crazy storm. First, the Bank of Canada slashed its policy rate in March 2020, making mortgages dirt cheap. Variable rates dipped below 1.5%. Fixed 5-year mortgage hovered around 2%. Borrowing exploded. Mortgage debt grew by $150 billion in 2021 alone. Second, programs like CERB pumped $500 billion into the economy, with households saving an extra $200 billion during lockdowns. That cash flooded into real estate as people upgraded homes for remote work. Third, with offices closed, urban dwellers sought bigger homes in suburbs or rural areas. Bank of Canada analysis showed suburban price growth outpacing cities by double digits. Then in hotspots like Ontario and Nova Scotia, investors snapped up 20 to 31% of properties, per Stats Can data from 2020 to 2021. In PEI, it hit 27% in some urban pockets. Estimates reached 41% for condos and houses. Investors, including multiple property owners, accounted for over 50% of sales surges in places like Toronto. This wasn't just locals. Foreign and domestic speculators piled in, betting on endless gains. During this boom, sentiments were split but increasingly euphoric. Many saw real estate as an unstoppable force. Discussions highlighted the frenzy, with sales up 46% and prices 18%. Reports noted demand surpassing pre-pandemic levels, feeling like a surge in activity. Articles described Canada's market not bursting but racing to records. Debates questioned whether bubbles in various sectors would burst soon, while others dismissed fears pointing to low mortgage burdens in many homes. Overall, during the peak, optimism dominated. Real estate felt like it would appreciate forever, driven by new normals like remote work. But bubble predictions persisted, listing the assumptions like prices will always rise, debt will always be manageable, there's going to be no future crises, and rates will stay low forever. Charts showed global consumer sentiment soaring on buying. Fears lingered, but the fears drowned them out. Now, post-boom, after rates started rising in 2022, the air came out a bit. The Bank of Canada hiked to 5% by mid-2023, cooling the market. National prices peaked in February 2022, then fell 15 to 20% in real terms by 2023 per adjusted CREA data. Sales dropped 25% in 2022. By 2025, the markets slumped further. So what can we learn? This wasn't just a blip, it was economics in action. Low rates and stimulus created artificial demand, inflating a bubble on an already high price. Investors amplified it, and with everything changing so dynamically with COVID and people working from home, it really changes people's mindset of thinking, what is real estate? And maybe this could last forever. Maybe this time is different. For Canadian history, it highlights how policy can distort markets. Echoing past booms like the 1980s oil-driven surge or the 2000s credit expansion, politically, it's fueled debates on affordability, immigration, and inequality. That's all I got for today. Thanks for joining me, and I'll catch you on the next one.